Very good afternoon and welcome back to the second technical session. Other commercial laws, PMLA. We have with us Advocate Sathyanaarayanan sir. Sathyanaarayanan Srinivasan is a commerce graduate and a master's in law and sociology from the University of Madras and an associate member of ICAI, ICAI and ICSI. Has done PG program in Treasury and Forex Management from ICAI, CSR from ISACA USA, Intellectual Property Program from ICAI Institute Geneva, and a graduate certificate program in International Arbitration from NUS Singapore. Worked in a large Indian corporates, MNCs and banks for over 15 years in senior positions. Enrolled in the Bar Council of Tamil Nadu and Pondicherry in the year 2001. Currently a partner with Wise and Worth Advocates and Consultants. His practice area includes tax laws, IBC, corporate laws and intellectual property law. He regularly appears before Commissioner Appeals, ITAT, CESTAT, NCLT, NCLAT and High Court. Regular speaker at various forums on IBC, tax, IPR and tech law, corporate laws and the topics of general importance, and is a regular writer in various professional magazines. Presently, honorary advisor for direct access to Andhra Chamber of Commerce. Presently, he is doing a research program PhD in Tamil Nadu Dr. Ambedkar Law University on Goods and Services Tax. He has his office at Adambakam, Chennai. With this brief, I have great pleasure in welcoming Advocate Sathyanaarayanan sir to take us through the PMLA and other commercial laws. May I now request Kasturi Rangan sir to come forward and present a shawl and memento to Sathyanaarayanan sir. Thank you, Kasturi Rangan sir. Over to Sathyanaarayanan Srinivasan sir. Very good morning. There is a portion of wisdom in Mahabharata where Vidura advises Dhritarashtra, popularly known as Viduraniti. Vidura very explicitly advises the king that a person will lose his sleep and also peace of mind when he engages in illegal activities, when he gets more ill-gotten money. These are through various versions, these get depicted in Mahabharata. With that, friends, very good morning. It should be good afternoon in another 10 minutes, so that's still good morning. It's echoing, to an extent. Let me start expressing my gratitude to the organizers, the chairman and the other office bearers of the SARC of the Institute, and to you all before we start. Now, very interesting one, and PMLA, Prevention of Money Laundering Act. Now, the schema that we are going to go through will have quite 1 hour, 40 minutes to go to hit 1:30. I'm not saying I'll go till 1:30.
what I'll do is that we'll restrict whatever we could close to an hour or so, maybe about 55 minutes to 1.5 minutes. And then I'll leave at the end for any questions to be there for the last 15 minutes. Broadly this is. But that does not mean that you have to ask questions only at the end. Wherein you find I need to be interrupted, you may feel so to do it. And what we do is that, broadly what we'll do, we'll have a understanding to the subject by introducing the subject to you. Then we'll look at what is money laundering, to be very precise. There have been many notions, floating around. 10 years back, I also had a different, 10 years back I'm telling you, I also had, 2002 is the enactment. 10 years is after 10 years of the enactment. I had a different notion about PML as to what is money laundering as such. And then we look at PMLA, the enactment as such. And then we look at the responsibilities and the role and responsibility of a chartered accountant. And if time permits, let me put this caveat, we look at some case studies as well. As we go along, I'll give you various, live examples, though I may not mention the name, okay, or take out, parties involved in it. But as we go along, there will be here and there, live examples, that will keep, popping up. And don't ask me further questions on that. Some of which we could have handled, or most of it. A quick, why are we talking about PMLA? And what is the magnitude here? As chartered accountants, we are the accountants for the world. Anything that is done. Now, what is happening is that about 2 to 5% of global GDP, which is $800 billion to about $2 trillion, every year in terms of current US dollars or laundered money. This is the report of United Nations Office on Drug and Crimes. Now, this is reported in Times of India. This is the magnitude that we are talking about. So, we are setting pace as to what's our role and what we can do. Let's start about. Now, money laundering was made a criminal offence only by way of a Vienna Convention in 1988. Prior to that, it was not. Now, G7 was established FATF. You know FATF, right? Sometime back, we heard Pakistan is put under grey list. Will they go, slip that way or this way? Will the funding stop, for it? What will happen? IMF will fund them or not? If they still continue to be in FATF, that's the FATF, which was set up in 1989, and 40 recommendations were made to counter money laundering. And some of these recommendations have translated in reality to find its way into domestic legislations across the years. Third thing that happened is the anti-money laundering guidelines internationally was issued, where an obligation was put on member countries, or the UN member nations, states, to report suspicious transaction to FI, Financial Intelligence Unit. Every country has an FIU. We'll talk about it, we'll understand that as we go. Now that's the international scenario, that we, three different broad things that happen, which has put the law in motion, or the context in motion. Now, coming to the Indian episode of it, India was part of the Vienna Convention and FATF. So they were obligated, being also a member nation of UN. Prevention of Money Laundering Act, though introduced in 1999, was passed in 2002 by both the houses of the Parliament and came into effect on the 1st July 2005 subsequently. It did not come into effect immediately. Then amended about 4 times in 2005, 2009, 2012 and 2018. And what we are going to find is as it stands today after all these amendments. Wherever required, I'll highlight the amendment there. If it's not required, we'll just move on. And I'm not going to run through the barrack. Let me be very clear to you. I'm not going to run through the barrack. That's not going to be the purpose. Now, especially all these amendments were meant to expand the list of reporting entities for suspicious transactions. There are 2 reporting that is done. One is cash transaction reporting that is done, which is a normal reporting. The second one is suspicious transaction reporting is done. So all these amendments focus was to expand the list of STR. We see what the STR is, where all these stand, all that. Now you'll ask me a pertinent question. All that is fine. International things happened in the 1980s and the early 1990s. And then India introduced in 1999 the bill, passed in 2002. The executive itself took about 3 years to notify it. 2005. From 2005, now we are in the verge of 2024. What, 19 years? Why are we talking about this now? This is the context. Now what happened is that there was a notification issue on May 3rd, 2023, wherein chartered accountants along with its sister professionals were notified as a relevant person under section 2(1) SA 6 of the PML.
Why not advocates?
It's a good question. They are always exempted. They are always exempted. You never asked, why GST doesn't apply, service tax doesn't apply to them, right? It's on a reverse charge.
That question was always asked, that also no answer.
For many things, we know only the questions. Okay? We don't know the answers. But you have to ask this to those, we all wrote, CA exam long back. Okay? If you ask people now, they'll tell you. Sir, நாங்க என்ன எழுதுறோமோ அதான் ஆன்சர். நீங்க क्वेश्चन என்ன வேணா கேட்டு போங்க. So I'll not comment on it. I'm going to say as it stands. That's all. Not opinion on this. Now this assumes a great significance for us to know. Now until recently, we were not worried about this. We're not worried about, what happened was, I'm not worried about PML. Because now that chartered accountants are notified, we need to know this enactment. And this is, though I'm told, it's part of the current syllabi in the law. PMLA is also there. We know how, it's all there, part of. As students, when we look at the enactment, it's different, purely from an academic perspective than from a practitioner's perspective, or a person who is obligated to do certain things under the enactment. So now chartered accountants have an obligation to do specific things under the PML. Now that's the significance, that's the relevance it draws. Why? We need to know about PML. Now, are you comfortable with the pace in which I am talking? Are you comfortable with this language, or you want me to convert to Tanglish?
What is choice?
Sorry?
It's your choice.
No, whatever your comfort is, I'm comfortable in both. No, great. That's perfect. Now, having understood this background, the context with which why we need to understand or why we need to deal with PMLA now, broadly, we'll also look at what is money laundering. Can I understand from you what is money laundering? Any idea as to what is money laundering is? No. We have been seeing money laundering, PMLA, in the newspapers of late, very frequently, right? This is a slow setter law that has gained momentum. Now, broadly, society can be categorized into three different stages. Like what we have, foundation, intermediate, or that keep changing, and then the final. Then you become a member. Society also has three stages with which it has transformed and become. First is called an agrarian society. The second one is modern society. Then the third one is post-modern society. Now, we all know about the feudal agrarian society that was there, which was prior to the invention of the steam engine, when Industrial Revolution started. That is categorized by sociologists as agrarian. Then, from the invention of the steam engine, locomotive, the modern economy started, where the Industrial Revolution, we find all that. Then, after that, we have something called postmodern. Now, according to the US sociologists, postmodern started in the year 1974. But few others, have a different view, saying that, subsequently, but definitely before 2000. And it also changes, the economy also changes. The activity in the economy changes in these societies, and the way in which crime is committed also changes. We are more concerned about the last one. One thing is for sure, be it 1974 or any time before 2000, we are sure that we are in a post-modern era. According to sociologists, in post-modern era, many of the techniques used in the modern or the pre-modern, I'll say not agrarian, pre-modern era, are irrelevant. You find more of white collar than other crimes, getting committed. You find, the monitoring mechanism has undergone a change. Control leads to management. That's why, FERA has become FEMA. More management into it because you cannot control anymore. Now, colonies have also changed. You don't colonize the way it was being done earlier. Now, colonization is different. Everything, changes. Now, information is key in postmodern. And second is, surveillance is very common. We all know, we all feel that, nobody watches us behind, everybody watches us from the top. Right? Where we go, what we do, we don't remember, but our phone remembers. Google tells you, hey Satya, nee inniki in the November la idudha adhigamana travel. You took flight from here to here and you flew back, you drove so much, you walked so much. So that's the surveillance that's happening. Now, and the means to commit a crime is also different. How do they commit is also different, completely different. More white collar, where tracing itself is difficult. All this is there. So, money is needed for everything. What is money laundering? Is turning the proceeds of crime into legitimate funds. That's all. Put it simply. No complication, straight. If you look at section 3 of PMLA, which defines money laundering, it has so many words. I'm not putting so many words into it. proceeds of crime is there and you convert that into a white money, a legitimate money, that's PML, irrespective of what it is. Now, what could be the broad proceeds of crime? Now, drug deals, acts of terrorism, fraud, robbery, tax evasion. Now, there is an obligation for reporting, which we saw. That's one part. Now, the other part is also coming up. We'll run through the definition as well. I don't have that in this slide, but we'll run through the definition in the section 3, which the Honorable Supreme Court also had an occasion to look at. As we go along, the PMLE, we'll talk about that. Now, we know about drug deals, all narcotic and psychotropic drugs, that's getting traded, and that's one of the mode by which the flow continues in the parallel economy. I wouldn't use the word black economy, black market, but parallel economy. You have a virtual market as well there. Unlike, similar to what we have, the web here, you have a dark web as well. There all these things happen. And acts of terrorism, including flesh trade, organ trade. Now, flesh trade can also be, segregated into different, including organ trade. Slavery, also one part of the then you have fraud. Normally see, right? Bank frauds also get covered in this. I know a professional who appears to have signed some balance sheet somewhere. There was against the borrowers and the others involved, and some bankers, Prevention of Corruption Act, was applied and prosecuted. The MLA was also initiated. This professional was also roped into it. So fraud includes. Don't ask me whether ITC fraud would get covered. Bill trading will be part of it or not. That covers both fraud and tax evasion. And then robbery. Physical more, rob. Now haste is more important, right? Money haste is what people talk about. Comments about, not just I'm talking about the OTT money haste that we have all seen, otherwise also. Moving on.
How robbery comes under PML?
Sorry?
How robbery comes under PML?
No. What has happened is that, as we go along, I'll tell you, there are scheduled offences, predatory offences, which are there under the PML. About 150 different offences have been grouped together in 3 different schedules, A, B, C schedule, under the PML. Any of those offences are committed, that would rope in PML. Robbery doesn't mean just going and stealing. Robbery, dacoity. That loose, this thing, this is used. No, just to clarify again, these are the broad things by which proceeds of crime gets generated. Fraud would also include corruptive practice. Manipulative, corruptive practice is part of fraud. Sometimes that would also mean you rob somebody else's money. I change the wage register, the roll, muster roll. I say so many have attended something, work, like paid But indirectly, if I packet it to myself, nothing but robbery. That's how robbery is. This, what we saw, this is what is PMI. Now, how this PMI is done? The next question that normally asked. 6 sisters, what, how, why, all that. Now, the first and foremost thing that happens is placement. The second stage is layering. The third is integration. When proceeds of crime is there, I think we have all seen Shivaji movie, right? I'm not talking about movie acted by Shivaji. The movie called Shivaji. What happens is that, the proceeds of crime, that's different. You have earned already that money. You have possessed that money. Now, that money is placed in small quantities across different accounts or different places. Now, next what happens is that then you layer it, cover it, you wheel it to show that it is something else into an investment or something of that sort. Investment could be also, could be into immovable property, could be into bullion, could be into the latest cryptocurrencies. Very volatile. If I say that I made so much money, people need to. That case goes on. That's layering. Third is integration, is introducing that money into the economy back. Now, let's take an example. Let's talk about a corrupt politician. Let's talk about a corrupt politician, X. I'll not say Mr. or Mrs. or Miss. Okay, all these are this thing. I'll say X.
It will always be X.
It will be X. That's right. A corrupt politician, takes a lot of bribe. Let's say, he makes a lot of money out of corruption. What he'll do? He'll try to place it and send that money outside India or within India. Let's say how it is sent outside India could be through a drug. Something is placed here, okay, through the international border is crossed through a flesh trade or through a drug or ammunition movement, all that. It moves. Then there, the beneficiaries, get. That's where it gets placed. Different packets could be into different accounts everywhere. Then after that, it is changed, routed through different accounts again, internally. Probably they place it in a stock market there, and you get a return. You withdraw that or place it in a fixed deposit. You withdraw that. That's placing that happens. So it becomes their money. Now what they'll do? Through a P note or through investment in India or a donation into a NGO might be related to the Mr. X, X, no Mr. X, okay, related to X, it gets that. That's the integration. So after the NGO gets or the business gets an equity money, it uses for its needs. Great effort is put, mainly if you look at the international scenario, that was more on drug and terrorism. That's how it started. It started mainly for that. Okay, they wanted to curtail to the menace of drug and also the terrorism activities. That's why FATF, Pakistan, terrorism is where they hold this thing. They've not handled it properly. All that is the question. Now, whatever we said, this is how it is. Placement is initial transaction. The first way it is. At that point of time, the money is still dirty money. It's not a clean money. It's not a Then the second is where the transaction's origin is concealed. That's when those placed in an FD or into a stock market or into buying cryptocurrency or anything of that sort, or a property they invest in. Then after that, they take that money out after a period of time, whatever could be the duration. Then finally, integration. Integration is introducing that money as a clean money into the economy back. This is how the routing happens. Now, if you are through with this, we'll move on. What is the objective of money laundering act, PMLA, prevention of money laundering? One is to prevent, which is very clear from the nomenclature itself of the enactment. Next is to control also. Sometimes prevention may be difficult, controlling it also. Second is confiscating the property gotten from crime proceeds. Now this is very, very important, This is the main crux of PMLA. Let's say somebody does an offence. Let's say in the absence of PMLA, if confiscation is not going to happen, what will happen? X does an offence, he gets money. Let's say, X is given a job to murder someone, kill someone. For that, he is told that he is given a big bounty. What he do? Kill. He might get caught. He'll undergo the punishment. With that money, his family or whoever it is will keep enjoying it. Right? Will keep enjoying it. Probably he'll get released over a period of time. He may come back. And then, he'll also start enjoying it. This has to be put an end. Now, there is a subtle difference between all the criminal offences that we talk about and those connected with PMLA. The subtle difference is offences under IPC could be classified in different where the chapterization is there. Now, I don't know, I'm not seeing the new act that has come in place of IPC. Now, these are, some of them are against the body, some of them are against the public, some of them are against the property, like that classification is there. Now, PMLA offences are against the society. These are broadly offences against the society. So, if allowed, the proceeds of crime is allowed to be continued, to be used, it's going to further deter the society and make it. So, the other object of PMLA is to confiscate and seize the property that is obtained through money laundering. And third is to deal with any other connected issue on money laundering in India. Now, in this, we have a dedicated chapter on international cooperation. So, this is one law, one of those laws where you have extraterritorial jurisdiction. You travel beyond the boundaries of India. The definition of India itself changes from enactment to enactment, right? GST gives one definition, Customs Act gives one definition. No? So, is that nautical? How many nautical miles? No? Does that include exclusive economic zone? I mean, all that changes. So, it gives that extraterritorial jurisdiction. Now, what is money laundering under Section 3? It's very important. Now, before we move on, there were like 241 cases filed in Supreme Court challenging the constitutional validity of various PMLA provisions. All those cases were heard and the Apex Court upheld the constitutional validity of PMI. When all the objections have been thrown out, and there are few more cases that are pending on specific issues. We'll not go into those. And one of the important challenges that was there is on Section 3, the very definition of money laundering. Now look at the money laundering. Now we saw what money laundering in broad terms are. Converting dirty money into clean money. That's all. That whole process is money laundering. Now look at this definition now. Now I've split that so that it will be easier for us to understand. Now, whosoever directly or indirectly attempts to indulge or knowingly assists or knowingly is party or is actually involved in any process or activity connected, process or activity connected with the proceeds of crime and includes concealment, possession, acquisition or use, and this is what is important, and projecting or claiming it as tainted from here I think or claiming it as untainted property shall be guilty of offence of money laundering. Now the challenge before the Supreme Court, one of the challenges before the Supreme Court was this word acquisition or use. After that you have a semicolon, and is there now. Having that and, so the argument that was put across by the petitioners was that all the above and projecting or claiming it as untainted property should be there. That's a conjunction which needs to be added. Both that and this condition should be there. Supreme Court said no. That and should be read as are. Only then it will serve the purpose. Even if a person projects a property to be an untainted property, he is also guilty of offence. Even if a person claims the property to be untainted property, he is also guilty of offence. Now what it means is that somebody puts up a statement of affairs and a chartered accountant is asked to certify it. Would that cover? Is that projecting? Sir, நான் அப்பயே சொல்லிட்டேன், எனக்கு கேள்வி மட்டும்தான் சில இதெல்லாம் கேட்க தெரியும், பதில் தெரியும். So that's very important for us to know. Okay? So this and this has to be read as R. No, this is what is important for us. So look at whether directly or indirectly a person gets involved knowingly as a party to the whole this thing in the entire process or even a bit of it. Now let's say that. So we saw the three different stages, right, in which it is placement, layering and integration. I get money, what do I do? I don't question. I don't question, right? We know as chartered accountants, we would have at least heard about many other practices that are there. Let's take, for example, a bill trading that's happening. Known menace, which was under the VAT, which continues under the GST, and various measures have been brought from time to time to curb it. Tax invoice is generated, e-way bill is also generated. E-way bill sometimes happens to be a two-wheeler e-way bill. The department is also smart these days. They say very clearly, you say 10 tons of truck is sent, 10 tons of material is sent, but the number that you have given in the e-way bill appears to be that of a two-wheeler. So that happened. So the accountant, will he be part of it? The accountant who generates the tax invoice, will he be part of it?
Yes.
Direct.
So, this is what is important for us to know. At any stage you get involved in any of the scheduled offences, you are party to it. Now, at least when we come to the proceeds of crime, now I'll tell you that. Okay, what is we talk here, and I'll tell you what internationally how it is changing as well. Now, this is very important. In any of the process, at any of the three stages, if somebody is getting involved, he's into it. That's where the whole this thing goes on. Now, can we move on? Now, the key in all this is whoever directly, indirectly involves knowingly and involved in any process or activity connected with the proceeds of crime. That's what is important. Involvement could be on anything, no? So proceeds of crime is important to more, right? So we need to know what proceeds of crime, section 2, subsection U of PMLA. Any property derived or obtained directly or indirectly by any person as a result of criminal activity related to a scheduled offence. Now, scheduled offences, we have about close to 150 offences listed in A, B, C, 3 schedules in the Act. About 30 different enactments are there, like Wildlife Act, your narcotic and psychotropic substances. IPC about about 45 offences, different offences under IPC are part of it. About 10 different are from the narcotics, 10 different offences. All these gets covered in the whole this thing. Or value of such property would also get covered in the proceeds of crime. Now, if it is already converted income, that cannot be left out. So that is part of it. Now, this property could be anywhere in the world. It can be physical, it can also be a virtual. Need not just be a virtual, it could also be virtual digital asset as well. That would also get covered in this. Any problem. Now, internationally what is happening is that there are this scheduled offences that what is getting restricted is being breached internationally. Now, there are jurisdictions like Australia, Singapore and few others. What they've done is any crime, any amount got from any crime, PMLA would apply. That's happening. Now slowly it's changing, it's time, it could happen. So I'll tell you, another scenario where, just to give you an example. When you say I, and not me, I've not done any offense. X has got some ill-gotten money from a crime. Now what he needs to do, he needs to route it through so that he gets it back. Could be that it could also be payment to a professional, exorbitant amount. That is also a way of placing that happens. Exactly. Now all these gets monitored. All these gets monitored And that's what we would talk in a while, very closely. Okay? As we go along with this, I'll tell you how it gets monitored. Now, I told you about two different reports that gets generated. One is cash transaction reporting, which happens. The second one that happens is suspicious transaction reporting. Through this, they get FIU gets it. From FIU has nodal offices in each of the states and union territories. They collect it and report. Those designated institutions have to report directly as well. All this is getting covered. We also find now, when we go to file returns for our clients, we find they get the annual information report, AIS. Let's see what it is there. Everything is the same. Now, earlier, what used to happen is during the VAT days, attachment used to happen through the account number. Now I find under GST, something is there, no problem. PAN number is there. Write to banks saying that whatever accounts are there, whatever lockers are there, under this PAN number, freeze. That's happening quickly. Now, crime money, it could be bank, could be even casino, could be another market, where it could be paid immediately. And then, after that it gets into gold, Bitcoin, so that it convert into some investments, all that. Finally, it could be property. This is the property that we are talking to confiscate, seize and confiscate. Immediately our question will be, sir, we understood what is money laundering. If money laundering is done, what will happen? It will be the immediate question that everybody would ask. Straight to you is that the punishment could be an imprisonment, rigorous imprisonment, be anywhere between 3 years to 7 years. 3 years to 7 years is the rigorous punishment, imprisonment that somebody could undergo if convicted. For the narcotic drugs and psychotropic substances, 10 of them are listed. It could extend to 10 years. And the fine normally is 5, which could go beyond as well. So, in addition, it's not trained property, it's tainted property, shall be confiscated by the government. Who investigates all this? Enforcement Directorate. They investigate everything. This is under the Department of Revenue of Ministry of Finance, under the Finance Minister. Now, the investigation normally begins with a filing of ECIR. Now, ECIR, is that ECIR, right? Not EVOR. When you see from here, it appears to be ECIR. It is ECIR. Now, ECIR is, I'll not say similar, is somewhere like FIR. Why do I say somewhere like, I'm not using the word Aki and all that, because this is also challenged before the Apex Court. In those, 241 petitions that were there, challenging the constitutional validity. Now, normally, if an FIR is, put against a person, if you go to arrest him, what will happen? You have to give him a copy of the FIR if he asks for it. You have to give him. Now, Supreme Court says ECIR is not that of, he is not akin to that of FIR. It's an economic offence, information report, that's all. And ED is not akin to police, but they have certain police powers. Okay? That's why whether they can arrest or not, all these questions came up. Now recently when those issue cropped up with that, can he arrest or can he not arrest? Because ED normally acts through its director normally an investigating officer will be that of a deputy director or a assistant director, level person. He will be the investigating officer, IO. Now, so when somebody is getting arrested under ED, all that they need to say to that person getting arrested is that, look, you have done this offense, so we are arresting. That's all. They don't have to spare a copy of ECIR. So that's very important. And the whole investigation starts with filing of ECIR. That's more a file document for the ED. ECIR is not that of a public document, similar to a FIR, which is recognized under the CRPC. Which we have already said, about 150 odd offences are there, which they can. Now, these are some of the powers that they have. Power of survey under section 16, search and seizure under section 17, 18 is search of persons, section 19 is power to arrest, 20 is to retention of property, it's not 19, and 21 is retention of records, income tax 180 days, 1 year. 22 is presumption as to records of property in certain cases, and 23 is presumption in interconnected transactions. 24 is burden of proof. Now the burden of proof here is the reverse burden of proof. This was also challenged. Many enactments are there where it's always only reverse burden of proof, including our Income Tax Act, where all the 68, 69, 69A, all these comes in, only reverse burden of proof. You have to prove that the initial presumption is that it is enough. It is that property which is acquired through a tainted money. But that's only an initial presumption which can be rebutted. And the rebuttal has to be done by the accused himself by substantiating documents that he had. And this was also challenged. They said. The other thing that got challenged is, let's say a person is involved in an offence scheduled listed in the schedule and is part of IPC, Indian Penal Code. If he has done that, let's say 420, 406, 420 of IPC, fraud, forgery. Now when he has done that, he will be prosecuted for that offence. He will be convicted for that offence. Is this prosecution under PMLA in addition to that or not? Is the next question. No. Prosecution under PMLA and the rigorous imprisonment of 3 years to 7 years, exceptional cases 10 years, is in addition to that. Then would that not amount to double jeopardy? Would that not amount to double jeopardy? What's your answer? You're saying yes, it amounts to double jeopardy? No?
It depends, maybe because of the nature of crimes. Severity involved.
Okay. No, it is not. The PMLA is only after you get that tainted money, how do you use that money to make it a clean money? That's all. It has nothing to do with the offence that is separate. Though there is a reference to the scheduled offence, predicated offences under the schedule, listed under the schedule. It has nothing to do with that. This is to convert the whole money. Dirty money getting converted into clean money. So this is separate, that is separate. So it wouldn't get stuck under this. Now the next question that comes up is, normally when you go to a police station, whether when I say your client goes or somebody else goes to a police station, whatever confessions he gives to a police officer, that cannot be used in evidence against that person. No, under the Evidence Act also it's very clear. It cannot be used. But when a confession is done before a magistrate, it's okay. Now, EDism, also takes statements. Can that be used against the person? In many of the cases, it's being used. That will be the praying this thing that is used. Now, the answer to that is that one, first and foremost, is that he is not a police officer. Second is, there could be two different types of statements that could be taken by ED. One is recording a statement from a person by issuing a summons. The second is, a statement is taken after a person is arrested. Now, the general presumption is that when a person is free, he is free to. There is no compulsion on him unless it is proved. When a person is free, not under a custody, not under detention, he is free to talk. There will be no compulsion on him. So any statement that is given on a summons is free. So he was not under compulsion to give in a particular way. So those statements that are recorded through a summons are admissible as an evidence. And those statements which are given by a person after he gets arrested and he gives to the enforcement directorate, those cannot be used. Now this is the distinction that was drawn. Look at, we'll not go through all. We'll look at few of them, which is very relevant for us. It will be easier for us. Now, power of survey under section 16 is broadly into this. Hope it is visible or distance is also big.
Just make a close survey.
Sorry?
You have to make close survey. Close survey.
Close survey. Now, I'll just read it.
Right.
I'll just read it so that it will be easier for you. If an authority, after completion of survey, forwards a copy of that's this thing, on the basis of material which is in his possession, and has a reason to believe which is in writing. The reason to believe has to be in writing, which when a reopening of a suspense, we get that. And offence under section 3 has been committed, commissioning of such offence is carried on. Then it should be then he may conduct a survey on that person and may enter any place which are within his area or authorized for the purpose of this section. If he is authorized to go anywhere else beyond his area, he is authorized to do so. He can do it on any proprietor or any other person. It is not just restricted to that person alone, to anybody else. Survey, if authorization is there. And the question is, does the person who needs to be surveyed needs to be named, place needs to be listed? Of course, yes, needs to be done. Now this, whatever he gets, a copy of the reasons so recorded along with the material in his possession will be sent to the adjudicating authority. The adjudication process will be like this. There is somebody called adjudicating authority, who's above the, who's the authority to whom the ED not reports to gets confirmation from. provisional attachment is normally made by ED, which is for valid till 180 days. The condition is provided within that 180 days, the ED files, the investigating officer files an application before the adjudicating authority for confirmation of provisional attachment, so that the attachment becomes continuous. Then, if somebody is aggrieved, under section 5, attachment happens. If somebody is aggrieved by an order of the adjudicating authority, he can go before the appellate authority. No, adjudicating authority in appellate authority or in Delhi. Go before the appellate authority, and then from there, High Court, Supreme Court, okay, the Constitutional Court. Apart from this is one. The second one is simultaneous to ECIR and investigation. A charge sheet is filed before the special court, the criminal court, the local jurisdiction. And then that criminal proceeding would continue further, and if the offence is proved. Now here, when we are referring to an offence, we are not talking about the scheduled offence. We are not talking about the scheduled offence. We are talking about the money laundering offence, which is the process of the 3 stages through which each moves through. If it is proved, then in addition to the punishment, the property is also confiscated. This property can be any property. There are also cases we have handled where not just the property which is proceeds of crime, but a property equivalent to the proceeds of crime is also getting provisionally attached and confirmed. For example, let's say all that needs is only a source, right? I'll give you an example of this, probably to help you understand. Now, a person is accused of money laundering. A person is accused of money laundering. Say bank fraud. Put it simple. Okay, it's a bank fraud. So ECIR is registered. Now, parallelly, the proceeding starts. They come, they attach Y house property. Y tells, look, don't attach this property. This property was bought by me for so and so. This is the sale deed. Look at the amount there. 90% of this amount is funded by a nationalized bank, by way of a loan. Now, then that property is not a proceed of crime, because that property is bought from a loan obtained from a nationalized bank. You can't accuse of a nationalized bank having this thing. Now, at that point of time, the ED can say, look, maybe this property is not a proceed of crime, but the value of the property I am attaching being equivalent to the proceeds of crime. So that's something that you can look at. Next is attachment. Now what happens is that if the investigating officer has a reason to believe, yes.
You're saying that he is attaching another property which is not the actual proceeds of crime. And if you come to PMLA, it says that if proceeds of crime is converted into some money and brought back into the system. So let us say that I have concealed 50, there is a proceeds of crime of 50 lakhs and I have spent it. How can he attach it? Because it's not contrary to what the act is about, because it talks about money being brought back into the system. Suppose I don't bring it back into the system, will it still be applicable? Because here, there is no other asset, you are saying that he is going to attach this asset. He can always contest that, assuming that he is accepting the system, he said, I have spent that money, I have not brought it back into the system. How can they contest?
Now, quickly, proceeds of crime is the money that you get from crime. Now, two things very important. What is the reason for the suffering of human beings is the question asked, for which Krishna replies, saying that possession and enjoyment. You possess something and you enjoy it. Okay? Now, everybody wants to enjoy. I do something to only enjoy, right? To be happy.
That's it. That's it.
Whatever I do is only to do that. The offender commits a crime so that he gets some benefit out of it and he wants to enjoy that benefit. Right? He wants to enjoy that benefit. Whether he enjoys directly or indirectly is not the question. Enjoyment is there, permanent. Let's take the proceeds of yes.
One point is, you were saying some other property, but suppose he has actually got some crime he has done, he has got some money, he has got a property, one. But he is actually having another property out of not crime, out of genuine source, whatever it is, of a tax money he paid only or whatever he has not evaded. There are two things to it.
Correct.
You need to say the first plus second both gets attached.
Correct.
The question is why that legitimately tax paid property which is got by paying everything correct should get attached rather than
That's what I'm answering. That's what I'm answering. That's what I'm answering. Now, so enjoying is the key for that's the human nature. Human nature. Now, I got money. Once money comes in, you don't know what to do. Right? Casinos are there. I go gamble. I lose. Genuinely, I lose. But offense I've committed, I got some money, so let's say about 10 crore worth money I've got. By doing an offense, 10 crore worth money I got through the PMLA, this thing. Out of which I gambled, I lost about 8 crores. Now what is left out is only 2 crores. Just attaching this 2 crore, the offender is not going to be denied the benefit of his enjoyment because he has otherwise also got properties, value, properties. If that is also attached, this is more, deny someone of an enjoyment so that it acts as a deterrent for that person to commit an offense.
So, the basic presumption itself is lost because you
Which?
say proceeds of crime has to come back into the economy. Here,
Aha.
proceeds of crime does not come into
No,
the
no.
economy.
Proceeds of crime need not come into the economy. What comes into the economy is the dirty money gets converted into, is streamed into the system. And the whole idea, that's the process that happens. That's the money laundering that happens. What they are trying to do by attaching and confiscating the property is to deny the person the benefit. Possessing and enjoyment, that enjoyment is curtailed. When you cannot enjoy something, you are deterred from doing something. If I'm not going to enjoy something, what I do? Leave it. I may not venture into it. That's more a deterrence. Punishment is always a deterrence. And imprisonment is one part, confiscating the property is the other. Confiscation of the property is attachment or confiscation of the property need not be just the property that is got from the proceeds of crime. If that is not sufficient, other properties could also get attached.
But this is a legal process. It is not a judgment. The judgment says it's attachment, that's fine. But in the process, how he has got, he doesn't have the right to attach this property, which is not derived out of that crime.
The whole idea is to deny a person of his enjoyment. That's all. Once, if then he will not commit an offense. if he cannot enjoy.
No, okay, fine, sir. But that has to be done by judgment, not by the process of doing this. This agency is
Now,
in the
now
process.
this is this question also came up in those batches of 241 petitions challenging constitutional validity, for which under Section 5, the Supreme Court said there is a proviso which clearly says ED is not going to just, he is only going to provisionally attach, and that provisional attachment is valid for 180 days, but he has to immediately apply to the adjudicating authority, and only the adjudicating authority is attaching after he satisfies. What he needs to satisfy, there are checks, the Supreme Court felt that there are checks and balances. What he has to satisfy, there is a reason which is recorded, reason to believe is recorded, and a prima facie case is made out, and the presumption under Section 24 is still not rebutted, but he has still the time to rebut those presumptions. He has time to rebut those presumptions. The burden of proof is on the accused. So he has applied, the investigating officer has applied for confirmation, and opportunity is given to the person to whose property is getting attached to represent before the adjudicating authority, which is a quasi-judicial body. If any order passed by that quasi-judicial body is also again appealable, and statutory appeal lies before the appellate authority. After that, Article 226 is available before the High Court and the Supreme Court against the appellate authority. So the Supreme Court felt that sufficient checks and balances are in place. Sufficient checks and balances are in place. Because of that, the attachment can be done. Is it clear, sir?
It's clear, but it's not. I don't consider it a satisfactory answer. I mean, what I mean to say is the intention from what you said in the beginning was that proceeds of crime should not, in some form or the other, enter in some other form, it should not enter the thing. So that is not that, because why I'm asking this question is, most of the assessees who come to chartered accountants for advice, taxation advice, they will have a small problem in the sense that whenever they sell the property, they will have a small cash margin, which they cannot avoid. So what we tell them is, try your best to go for a full white transaction. If not, you take a small portion and spend it. Don't deposit it to the bank or don't, because there's no the choice. So, whether these kind of transactions will also come under PMLA and
correct. Yes. Record ஆயிருக்கிறதுனால இந்த எக்ஸாம்பிள் சொல்லல, நீங்க பேசுறது ரெக்கார்ட் ஆயிருக்காது. This இந்த எக்ஸாம்பிள் வந்து perfectly correct. And then taking that cash component, you have not disclosed it to the department, right? What you should have done is that both the entire consideration that you have received by way of bank transfer, if any cash component is there, both have to be put and offered as sale consideration in computation of capital gain. Had you done that, fine. Otherwise, what happens is this is what mainly, I'll tell you what happens, okay? I get cash. What I do is that I'll try to spend them. Probably I'll create a more luxurious space where I can live. I'll go, instead of economy class, I'll go in first class, business class, okay, overseas first class. I'll, instead of those who drink alcohol, this thing to a bigger, valuable one. That's how you spend it. Like you show your lifestyle has improved, and you spend those money. But assets, whatever you have created, still remain. If that money is not there with you, let's say that cash is not there with you. If you want to spend, if you want to live the same lifestyle, what would have happened? The money would have gone from the existing assets that you have created, right? From the existing assets that you have, from that money would have gone for the same lifestyle. Had it been for that, larger valuable beer or whiskey that you have, or the first class ticket, the differential, to that extent your wealth would have come down. So that's what precisely they are trying to do here. Now look at the Bitcoin moves. Okay.
Spending, sir, by spending, it has come into the system again. Whatever it gets into the definition. Definitely by spending, it has come into the system in some form or the other.
Correct. It's not the question of getting that back into the system. Now we need to look at what happens, through PMLA. Through PMLA, what happens? If we understand this, probably we understand it better. Now the conversion process that takes place, it's not directly that your dirty money gets immediately converted. The process it runs through is it funds terrorism, flesh trade, narcotic drugs. When I say terrorism, arms gets covered. Arms gets covered. These are the broad three things, through which it goes through. Otherwise, traveling from one location to the other, you can't carry cash. You've got cash. You can't carry that big cash. If you carry about 10, 15 lakhs or 45 lakhs, you get caught, right? Normal this thing. Your airports and everything happens. So how it crosses borders? About 3 years back, a big case was caught in England. Where it involved, France, Italy, Spain, all these countries were, actors were involved in the crime. Drug distribution. Next step is that diamond that gets in, not just investment, movement. That's how it moves. Cross-border, it moves only these three. Flash trade could be women getting trafficked, could be organ trade. Third is slave trade, especially from third world countries. Slavery. Slave trade is happening. So this is broadly. So this is how money moves from one to the other during the process of conversion. But we are talking about 50,000 or a couple of lakhs. But here, that's why the first slide was that you saw. We are talking about trillions of dollars annually. Annually, trillions of dollars. And this cannot be moved. Like how much ever first class flight you fly, how much ever costlier alcoholic drinks you drink, this cannot be spent. So we need to look at the broader things that's there. So if the more we allow, it's going to be the same. And you cannot say only for that I'll make it an offense, not here. This classification issue will come in.
Even this trust people over there misuse the objects and take a personal possession, and again people enjoying it. Some of the news and all these things where they were all the head of the trust international things are there, but social organizations and others go. There was some articles which floated around which said they had a lot of personal property and all luxurious living which has happened. That also get into this.
Yes, yacht, many things get. Some of these, don't become that public, but things keep happening. Huge amounts of assets have been, been attached in India, and the success rate is also very high of late. Of late, the success rate is also very high. This actually is happening.
Denominator problem. That also leads to
Sorry, one after the other. Yes, sir.
Binami properties. Binami
Binami
properties.
properties.
That doesn't include.
There will be link. Obviously, there will be link. Now, let's say for example, this is an example that I'm giving, a broad example, not pointing to. As I said, all these illustrations, just out of simulation. Now, let's say Binami transaction, you got some money somewhere, you don't get directly into your account, okay? You are entitled to, you are the beneficiary, you get it through another professional friend of yours, someone who's distant from you, so that arm's length, at arm's length always. And that's where, you cannot be caught. Now, that arm's length person writes a will in favor of your grandson or your great grandson. Binami, right? The MLA also. You to see. Now, see through, that's what is important. Remove the cover out, see through. If it is see through, you are in. Any linkage, that's why directly or indirectly. That's why 241 petitions to challenge constitutional validity. After that also we'll have petitions, we'll challenge. That's how law evolves. And this is very important thing that needs to get evolved. And this is a menace not just in India, internationally. That's the international compulsions to it, and domestically also it's acting. In one of the recent judgments of Justice Kaul, who retired from the Supreme Court this month, so it's still in December. He has said that he was talking about the judgment passed under Article 370, all that, and the pundits, he has also said about this thing. He said, in a way, demonetization, indirectly, it stopped pelting, all that. That was also a different way of funding the terror activity. Indirectly, just making reference to it. So this is very important, that there has to be reason to believe based on records. And that reason to believe has to be in record. And all this what gets challenged. Now when we go to challenge before adjudicating authority or before the appellate authority of PMLA cases, this is the main thing, that works on to do it. And Supreme Court felt that there are checks and balances, though powers are given to the investigating officer to provisionally attach the property. We'll move on. Sir, yours is clear. You asked for something.
No, is there any monetary limits or something?
Nothing.
Nothing.
Sir, it could be small packets, distributed in several in placements. Very small amounts, and could get converted into big. Let's take that Gentleman movie that we had. Small. How it could come to an NGO into this thing, or the Shivaji movie. Smaller this thing into a.
If ECIR is denied to the accused, how could the court expect?
No, ECIR is not given to him at the time of arrest. ECIR is not given to him at the time of arrest.
Later it has to be.
Later it will all be available. Once the provisional attachment happens, it's available. Normally they don't arrest upfront. After thorough investigations they do, and there is an exchange, across before they do it. Normally, good groundwork is done, homework is done before acted upon.
Through Interpol?
Sorry.
It would in the international transaction
Used, there is a mechanism that the Act provides for. There you go through the embassy, go directly there, because everybody is member nation. Normally, they also have to say, check whether is that a crime in that country. It could be a crime in our country. There could be, two different, cross-border could be of two different things. One is a crime committed here, money gotten, which has gone out. And invested there, and then it comes back or it remains there. It could also remain his asset there, need not come back to India. Getting into the system, need not be back to India. He could have some houses, in London or in somewhere else, offshore locations, unknown locations. Could be, somebody would have bought islands, cities, all that.
That's what Mr. X does always.
Yeah. So the second type could be that where the offence is committed there and the money gets laundered here. That's also possible. So in both the cases, what happens is that for them to cooperate, the offence has to be an offence there as well. Let's say corruption is an offence in India. Let's say, for example, it's an something is an offence in India. In Pakistan, it's not an offence, then they will not cooperate. In US, it's not an offence, they will not cooperate. But if it is offence both, they have to. And that is where the viewers got by FATF across from all the members. Is the other country cooperating with you or not? They are not cooperating, and if you give their name, that's where the grey list comes in. Blacklisting, grey list, all that comes in because of this reporting by other countries saying that, in spite of giving information, he is not acting. Okay, he is not acting, then put him in. Many complaints are coming against this particular state, nation, then put them under grey, monitor closely. Now that's what. Now this is what we saw. An original complaint is filed before the adjudicating authority for attachment of properties, and then adjudicating authority passes an order which is appealable before the appellate authority. Now we are to the final stage, okay, of our presentation before case studies. There is something called FIU, Financial Intelligence Unit. This is under the Department of Revenue in the Finance Ministry, Union Finance Ministry. It's a central agency to receive, to process and analyze and to disseminate information relating to suspected financial transaction, SFT. To enforcement agency, and it also does to the foreign FIUs as well. And what it does that, it has a nodal officer in every state and union territory to assimilate and take it. And whatever information FIU gets, it also gives to other investigating agencies, including the local police. It sends information to them so that they pick up, whatever investigation they need to do, they'll do it. And reporting is of two different things. One is suspected financial transaction that get. Second is cash transaction also gets. Cash transaction does not mean physical cash. Could be any big movement in bank accounts could also get reflected. They analyze those. They find trend, what is happening, little investigation through them, all that is done. This is the primary info with which it starts. IND stands for India. Now, these are the reporting entities. I don't know whether it could not be again said. So these are all the reporting entities that we have. Now this chart brings you in all. This is where we have our chartered accountants also included in May 2020.
And the reporting also, right?
And the report.
India portal.
Now, banking institutions include public sector banks, private Indian bank, private foreign bank, cooperative bank, RRBs. Then you have financial institutions where insurance, all NBFCs gets covered, including housing finance, and the payment system operators also gets it. This is the amendment in 2009. Like PayPal, all this, Paytm, all this, comes in. All UP operate. Authorized money exchanges, authorized dealers, authorized person under FINMA. Then India Post as well. India Post is also included. That's the amendment in 2012.
Yeah, that's because many people might have it in the post office.
Post office also.
Post office saying
Right,
no,
right.
but
All Patras could also be different name, Now you have linked everything. Now you have KYC across. KYC is that, you find KYC is only recently, right? Talking to a banker, he was telling me, he said, sir, every year you have to give KYC. I said, why do I need to give? Sir, there is categorization, certain industries, certain professionals, are supposed to give, frequently. Otherwise, once in 10 years is also okay. If amount flow into an account, this thing, aberrations, all that, KYC. Then you have SEBI intermediaries, all SEBI intermediaries, from venture capitalists to stockbrokers to registrar, merchant bankers, underwriters, portfolio, investment advisors. Then you have the depository participants, FIAs, credit rating agencies as well, into the reporting now, as intermediate. Then designated businesses and professions, then casinos come in. Registrar, sub-registrar is going to come in. That's where he reports transactions on immovable properties. The income tax department calls, and the real estate agents under RERA we need to register. Agents have to be registered under RERA. Dealers in precious metals, stones, and valuables. All this is introduced in 2012. Then you have private locker operators. Also happen. All this is the entire list. This is where ours is also included. Now, this is the starting. Now all this is available. I have already told. Okay, this presentation is going to be there. The institute said, they're going to put it in the website as well. Here you can download it. Now, this is taken from FIU India, the statistics. Right from 2006 to only up to 11-12 I put here. Beyond that I not put. Okay, obviously data have to be out and authentication is also there. What is happening is that when it was only 437 and 88 to 292 reports that are coming, totally 817 reports that came in. Now in 12 itself it has become 31,317. So transaction movement getting enlarged. Why 2012? This is where Post and others got it. Now this is going up. All this data, all this getting processed this same year, and it's also this thing. We also do a CBA, cost benefit analysis, before we embark on smaller transactions. We don't have to have a materiality concept like the audit into them, but they have their own CBA to work for. If it is not beneficial, they are not going to spend cost on it because they have so many things to look at. Smaller things they'll leave unless those smaller things are connected to a larger web. It's going to get connected to a larger web. Obviously, you expect the officers to look into it, irrespective of the value involved. Quickly, few things. Yes.
This reporting entities now chartered accountants are all things. Is there something like an annually we have to report something, or because under income tax something register office every year whatever the property sold above 30 lakhs they send a report. Like that is under PMLA, is there a report that we have to?
STR. If it is suspicious, no, annual regular reporting happens. It's a cash transaction report, which is like your sub-registrar is reporting all that. In addition to the regular reporting, whoever is asked to report regularly, wherever suspicious transaction you come across a suspicious transaction, you are supposed to. This is like a concurrent audit. In a concurrent audit, what happens? The concurrent auditor is supposed to give a monthly report and a quarterly report. In addition to that, whenever he finds suspicion, along with that, there will be one more report. He signed that, along with other reports. But it's supposed to be a separate report. Everything is pinned together to give online.
In fact, it is also
And in fact, sorry.
It's also a start report.
So
Do we have to report to FIU?
yes,
And then quarterly?
no, nothing. There is no periodicity. But Statutory auditors have to report.
There is anything, then nothing is there.
Nothing is there, you don't have to.
But company insists to file a new report.
You know, when you come across, you know, this is where the documentation plays a very key role. Normally, in statutory audit, you know, we have long back, you know, Kamal Gupta has 2 files, you know, talks about 2 different files. One is permanent file and you know, those, you know, audit working papers are very essential. Not just for a company incorporated under the Companies Act, but for any auditor. Even a GST audit is an audit at the end of the day for us. Even a tax filing that comes to us, we come across, you know, property getting sold. We need to record properly. That's it. All that it needs to show is that knowingly I am not a party to it. I'll go back just to show. This is very important, okay? Knowingly is a party, knowingly assess, attempts to indulge, is actually in the process. Actually involved in the process, we are not going to be. Another professional is going to get himself involved. Okay? To be a professional, he is not going to be. But where things could get into a problem is knowingly assist or knowingly is a party. If we will say, I don't know, the investigating officer is going to say, you knew. Now, whether I knew or not is for me to prove. Right? How do I prove it as a professional, as a chartered accountant? I have to keep proper papers. Somebody is coming. I know when you don't get remunerated for the hard work that you put in. But at the end of the day, if we need to do something, we need to do it. At least to protect ourselves, right? As a best practice, you know, standard practice, you know, we need to do something. You know? Somebody is coming for a filing of a return. Look at GSTR 9 needs to be done. Look at it. ITR filing, you know, he comes to us. You might have to look at, you know, ask for, hey, when did you sell? Where is the this thing? Get no. Record it. You don't have to get his signature. But your recording is very important, right? That's how you play, you know, proactively for yourself. To say that you were knowingly not a party. If you're knowingly a party, then you're committed an offense. Whether you got money or not is a different question. There is no limitation of liability clause to your fees. That works in statutory.
See, one more thing is that their hard-earned property is dead.
Obviously, you know, the crime, you know, whatever is there, to that extent you get. That's why your documentation is very important. Not only for this PMLA, for many other things, you know, your documentation is very, very important. I remember, you know, my days in Sundaram Finance, where I used to work there. For everything there will be a note. We have passed through those very these things. For every monthly there will be board meeting. For every board meeting, detailed this thing will be there, including, you know, whatever complaints are there, all part of the board notes, you know, that goes through. How? Here I am in board in other companies and I find it's not happening. It's not happening. Now, that probably, you know, we need to get back to, you know, certain documentation, at least at our individual level as professionals. That's important. That's the only saying that. I think we'll have, I mean, some of these we have seen. We talked about banking fraud, financial misconduct. Okay. I will not do it as a case study, we will not have time. Okay, we have just another 5 minutes for 1:30. Then income tax, probably one example is sale of a property which involves a cash component to it, could be an example of it. GST, ITC fraud, bill trading we spoke about, okay, though not as a case study. Okay, that could be one. And then undervaluation, overvaluation of sales and exports, there you mark up, to say, window dress yourself, right? So that extra money that comes in, not just parking of profits, but it could also have an element of payment. Normally, how we have viewed over invoicing or under invoicing is parking of profit, right? They are shifting the profit from one to the other or something like that.
Any product,
Anything could be. Small things could add up to
Transaction. The transaction.
reverse under, not comes under payment.
Mines and minerals, no.
So that's what comes under.
Mines and minerals, no. Environmental gets in. That's one. Environmental. Anything to do with the environmental. Now, globally, what we are talking is that the ecological balance is getting into an imbalance because of illegal mining activity that is happening globally. And, huge amount, that gets in. Okay. Displaces many this thing, and vital resources are just getting exhausted.
Drinking water.
Getting exhausted,
Sad.
So many countries, they are behind this illegal mining that's happening. All sorts. Now this comes under sand comes under mineral under the state. Okay. So that also gets covered. Could be something of what we spoke as well. Somebody getting paid for a song or this thing, that goes on, could also be a part of the whole this thing. So I don't want to stand between you and your lunch. Though I said, 1 hour plus, it took. From 11:50 we are here now at 1:30 almost, 1:28, according to that watch. Yes?
Sorry, I want to go back to my old question. Since the chartered accountant is now one of the reporting persons, so if a client is going to come to me and talk about the sale of property where now I know that around 5 lakhs or 10 lakhs is going to get cash, am I supposed to report? Is it practical?
Again,
No, hey, Mark, since now we have become.
No, if you find any suspicion of a PMLA, you are supposed to.
Tax evasion.
Now, if you know that there is a tax evasion, you are supposed to report, right?
Yes.
You knowingly become a pastor.
Now, even as per the schedule to ICAI Act, CA Act, you are supposed to report all statutory violations that you come across. Any fraud that you come across, you are supposed to, as a chartered accountant. Right? If you come in possession, otherwise, it's against your professional ethics. And it's a professional misconduct. Is it not? Then this question goes on the face of it. So I don't have to answer, right? You've been answered. Right, good. You've been answered. So what is key in all this is document it properly. If somebody says you have to do it, you have to do it. Document properly, keep everything. Now things are moving now. Everybody wants UPA, right? Nobody wants not to touch currency. Because I never had the UPA ID for long. Recently I got it. Okay. So this thing, for me, why is that, all that, there could be this thing. Finally, I found it even small vendors. You go to, from metro station if you want to take your vehicle out. He said, no sir, we don't take cash. You pay either through card or UPA. Said he will not touch even cash. Like that, I found many vendors, who said, we don't want cash, we will never take cash. They don't want to take even 1, 2 rupees, 3 rupees even cash. They say, pay through UPA. Society is changing. So people are getting to that, the cash dealings have come down. So 216 ST is there. Earlier we had only 216 SS and this thing. Now ST is there, It covers all the scenarios. Your event, everything gets covered.
But still there are a lot of traders who still go with cash. They are very adamant in that as well. Where a small flower vendor or as you said, a vegetable guy on the road takes Paytm, but a very big oil shop or things like that, they take cash.
We know very clearly. That's where the activities happen. That's where suspicion gets in. Because it's not that everywhere you find this GST violation. Like you see, bill trading happening. And there are records to show that specific industries are there, packets are there, where this is very much prevalent. And that's where, when based on risk management, they go behind those industries. Right? We know it for sure. And we don't go to party with them or to defend them at the end of the day. So as professionals having conscious this thing, we are very clear. We don't want to be party to it. But still, things keep happening.
And some of them are very extra smart in keeping their price at say 25% discount flat on product even at a very smaller quantity what people buy.
Correct. It happens. You can't eliminate it. You can only manage or control it, so that it doesn't overblow you. If there are no questions, I would like to thank you all for your patience. Just sitting there listening to more than an hour. I know how difficult it is. 1 hour 40 minutes. I know how difficult it is. Talking is easier. I know experience. So thank you all for your patient hearing and participation. And I also thank the organizers and the staff who have been cooperating. Thank you.
I wanted to actually cover audit trail first and then give very small thing about CSR because CSR to my knowledge is aware for many people considering it's been there and not a very complicated point or something there. So this is the hot topic sort of. So again I'll make it little participative to the extent whatever maybe the audience has also got limited. Looks like my possibly New Year before day. So just wanted to ask what are you aware about this audit trail provision? And why do you believe it came again? Similar to what we started risk based. Wanted to first know from you why did it come and probably then we'll go to the intricacies of it and quickly cover what it covers and things like that. And it got postponed and finally got mandatory from this year. So
Satyam case is there actually. Inspiration.
Satyam case, yes, that's a fraud, managed fraud. But is it only Satyam or?
There may be other reasons.
So the point really is we saw money laundering session just before. So how certain entries are done by management, how certain entries, if I'm not wrong, are passed that for MIS alone and those entries just get deleted without even a trial there in these records. And there are some entries like even sales entries getting passed right after say you can keep 12 o'clock of that day as dispatch time in some companies. But it is getting recorded say 1 month afterwards without the dispatch also happening 1 month afterwards to the customer confirmation getting received that it is received on time only, but the sales entry into the books gets passed say on 1 month from April say March 31st, April 30th entry gets passed, and say 10 crore, 15 crore worth of sales get booked or lakhs of rupees get booked. Point again, there are a lot of expenses, there are a lot of the entries which are passed, which are only for the purpose of reduction of tax. I have seen in a lot of places where tax practices are happening. We used to see some companies, not naming anybody or anything, keeping a lot of bills, empty bills from the vendor. So the point is, they have empty bills without any number, anything. They'll say, come on, I'll have to pay a tax of say 10 lakh, you're saying, my tax has to be 5 lakh. So what do you say? We'll have to book expenses. So the point really is, there are a lot of practices which have been happening, edits which are happening. There were things which are happening, which were happening quite a bit, like directly the price master and things like that. You say entries, okay, entries is another way, that at least the entries are deleted, there will be any trial happening there. They went and amended the price master, inventory master, sales register master, purchase order master, other things. Purchase order itself gets amended straight away, not amended but edited, straight from the back end route. So they go and edit the database straight away. So what happens, any entry which gets passed, if it has 100 rupee per unit, it will be at 10 rupee per unit or 1000 rupee per unit as the case may be. So you edit the master, the entry goes in that range. So who edits it, whoever wants to reduce or increase the sales or whatever. So these sort of practices were quite prevalent. It is happening also, it was happening very much, maybe happening even now, but it's fine to it. So to capture all those things, there is something called an audit trail which has to get implemented in the system by all corporates alone mandatorily from 1/4/2023. So just we are going to cover the mandatory audit trail feature, ICAI implementation guide, key terms, management responsibility, audit procedures, FAQs, expected reporting scenarios, building blocks, and what are the challenges. So as I rightly said, with effect from April 23, the Ministry of Commerce had made mandatory for companies for maintaining audit trail throughout the year. Proviso to 3.1 specifies the requirement for each company for use accounting software. So Tally as such, if you all are aware, there is a new version of Tally which has come in, which has this audit trail feature. So after you go back from here, better you ask clients to, if they start their accounting late or even they can change their accounting with limited books and records, small company with 20 transactions, 50 transactions, tell them to use the latest version of Tally and record the transactions again. Otherwise, they will not be complying with this audit trail requirement. It is the responsibility of management again for this effective implementation. Again, I keep saying, when I kept saying about risk-based internal audit, this amendment is for the management first. Because they are supposed to implement this as part of Companies Act. We are going to give an opinion in our audit report, and what under the other matters and legal paragraph, one of the section 11G sub-column, where we are going to say that the audit trail is applicable throughout there. We will see those reporting scenarios. So, as I rightly said, underlying objectives are reduce fraudulent activities, increase transparency and accountability, increase comfort for auditors, strengthen control framework. So the implementation guide, as it happened, ICAI came up with an implementation guide on this. I would also urge you people, please read, because I cannot run through. I have one more to attend and I can't take through everything in that guide now, but on a key aspects I am trying to take through. Go back and read that particular guide. It gives answers to a lot of questions. What is the definition of an audit trail? What's an accounting software? What's a service provider? What is software as a service? If it is there, how it happened? What is management responsibility? Illustrative wording, special consideration in fraud scenario. So, management and auditor responsibility under Companies Act, the maintenance of books of accounts in electronic form. This is another amendment which has come from October 2022. I don't know how many of you are aware. This also I lightly covered upon when I did risk-based audit. Is if you have a server which is outside India, if any foreign company, subsidiary or anybody is a client, that server actually sits outside India or sits in a cloud outside India, you are supposed to take a daily backup of all the transactions on a daily basis. Starting from 1st October 22, this amendment is effective, which a lot of guys, I don't know whether they are aware. If it is not happening, then you are not in compliance with maintenance of books of accounts in electronic form. You are in non-compliance of 128.
Act or Data Systems Act?
It is Companies Act. It is Companies Act. That's what I said. Many might not be aware about it. And this more affects the companies which are actually incorporated outside India and they have subsidiaries in India, or somebody who subscribed to a cloud service of maintenance of their software where the server of the cloud sits outside India. All these cases, you are supposed to keep daily backup of that in India in any form, in a cloud in India or something, and that has to get established and checked. This is a very, very important section. So similarly, 143.3J says adequacy of internal controls including operating effectiveness. This will get impacted if you are not keeping the books in India. Other matters, and as I said in Rule 11, company auditor or auditor rule, other matters to be included audited report, this gets reported.
Okay, somebody is having books, manual books.
Yeah, your question is right. Manual books are not covered under audit trail because this audit trail is for a system or a software which is used for recording books of accounts or entries. Should have an audit trail feature, and if it is not there, you are supposed to report. If they are using manual records still, you have to say in your report the client is using manual records and hence reporting this is not applicable. But it is not easy because only very few people are using manual records now. Every person at least has a Tally or Zoho or whatever we call nowadays, the latest sort of thing apart from Tally, where Zoho is getting dominant now after Indian thing is going on. So you have to get management representation for effective implementation, year-round availability of the feature, identify relevant applications. So what are the steps involved is, you have to identify, management has to identify relevant application, relevant records, configure the audit trail feature, ensure operating effectiveness, report exceptions, restrict audit trail access and periodic backup, retain records for 8 years. Any questions so far other than whatever people had asked? So applicability, all classes of companies including NPO or Section 8 and foreign companies. So it does not have exemption for your trust related companies or trust sort of companies. Everybody is covered. And sooner seeing this, I would urge even LLPs or big private partnership firms, after some point in time it could get implemented. Because that is where a lot of evasion, other things looks like happening in the market actually. But first they have brought it to corporates. So accounting software is some computer program or system that enables recording, maintenance of books applicable to business requirement. The functionality of such accounting software differs from product to product. Every organization, they have software for accounting, they have software for payroll, they have software for say ECL model and things like that. So each and everything gets covered. But then for the purpose of this reporting, what they have clarified is, whatever accounting software that has impact into your books of accounts only gets covered. For example, if I have a marketing software where I keep my list of customers and their phone number or KYC data, and I only keep it for the sake of my business and follow up, say a service company, automobile service company, keeps a list of all records of database of customers in a automated software and they keep following for business or whatever with them, or even any company does that. Those are not covered under this. But having said that, for the limited purpose of audit trail, Companies Act, it's not covered. Since we covered NBFC in the morning, a recent NBFC circular has come from RBI in November mid, where they have said any system which captures critical or sensitive data, this is applicable only for banks and NBFCs, not for others, and all RBI regulated entities, even if they are not NBFCs, or any system or software which has any critical or sensitive data, that system or software should have audit trail feature starting from 1st April 24. This is 23, this is whole of this year. Starting from this April 24, tomorrow is New Year starting. Starting from 1 April 24, the system which has critical or sensitive data, they didn't define what is critical, what is sensitive. But RBI said any system which has critical or sensitive data will have to have audit trail feature. So indirectly an NBFC, for all even customer, employee or whatever data we said,
we will not have, because it is not financial related and things like that, we'll have to have audit trail from April 24 for all systems mostly. Because any system will have any customer or employee or any data sensitive. Some sensitive data is there, it gets covered. Let's not go into the detail, but for the sake of overall knowledge, I just shared that. But anybody having NBFC clients or anything working in an NBFC, please take it back with you. Because what I understood after this audit trail was made compliant, for the sake of cost reduction, cost control and other things, very big companies have excluded the systems where financial data is not there. It's like your employee master, payroll master, customer master, vendor master and other things. Some of the tables which are only for operational purpose and things, they have excluded them from audit trail compliance because of the cost and the volume and the speed of the system getting reduced. But if it is an NBFC and RBI regulated entity, they cannot be doing it from April of this year. They are bound to follow that also. So the accounting software may be hosted in India or outside India, or cloud, or subscribed as software as a service. Yeah.
Does the NBFCs include baseline NBFCs also?
It is not having any layer of top layer, middle layer, upper layer. Any NBFC or any RBI regulated entity without any turnover criterion, because there are certain amendments which came in where only upper level NBFCs were to follow something. In this, there is no exemption. You can go through the management sort of RBI circular dated some November 15th or something, which has come on all this overall IT and other related circular has come. In that, this is covered. It has a lot of other amendments, which I didn't want to take it for the want of time. But I would urge you people to go back if you have an NBFC client. It's very important, and any critical or sensitive data, according to me, it will cover customer, supplier, everybody. But they didn't define. Again, they left it to judgment, and it will have a lot of problems. So records maintained as audit trail may include the following information: when changes were made, the date and time, timestamp, who made the change, user ID, what data was changed, and may be enabled at accounting software level or captured directly in the database underlying the accounting software. Database level also you are supposed to capture. That I told you, customer master, price master, where price master is at database level. Once you change the price according to different product lines, entry goes at that price automatically. So database edits as well, audit trail should get captured. So what does it say about book and paper? Books of accounts includes records maintained in all sum of money received and expended by a company and matters relating to it, receipts and expenditure take place. So it covers money received, payment, expenditure, receipts, sales and purchase and services, asset liability, item of cost prescribed under 148 in case of company which belongs to class of company specified. This is for costing records as well. So it covers all cost audit record related amounts, any books of accounts, financial things, sales and purchases, asset liability, sum of money. And book and paper or book or paper includes books of accounts, deed, voucher, writing, document, minutes, register, maintain paper or maintain on paper or in electronic form. So that's how it is given. But only thing is the manual books of accounts, as someone rightly said, they gave a exclusion and they said since it is for a software or something, you please tell that it is not applicable and that report has to be little qualified. Any doubts so far? So management has all these responsibilities. As I again said, like risk-based audit, your risk matrix, risk list or list of whatever things is management responsibility. List of controls over maintenance is management responsibility. Identification of software, identification of transactions, identification of accounting transactions and whatever audit trail has to get compliant. Capturing the changes, whether it is enabled, all this is management responsibility. So right from now, what the advice, again another point which we want to be clear is, we should try avoiding doing accounting advisory client services for clients where we do audit. This is very clear. If we are doing that, tomorrow the question will be, you only have passed the entry, I don't know anything what is happened. Straight away they will say auditor knows everything about changes. State comment, they'll tell to authority. That is what even every time they say. As he was also saying, you have to maintain documentation and things. If you are going to record, somebody asked a question when I took this same session in one more branch, where they said, what happens when we are doing the accounts of client? I said, please stop doing it. After actually this is amendment. You have to make sure in a way to do it but it has become very difficult even if you do in other entity name or whatever name you call. They will say it is all Ram and Co or A and Co, whoever is there. Sir, they did. Avanga innor name la they did, sir. We are not aware. Avanga changes ella avanga pannitaanga, sir. Delete la avanga pannitaanga. They will very clearly say. And easy to wash their hands actually. Though they may be party or they may have told to do the things, better we don't do it. And again, using your office system to do that, all this, your IP gets captured, everything will happen nowadays. Please be careful. So I think we have to be very careful because all the small and medium practitioners related, this becomes a big headache. In small private company, which is one man, two man company, they say everything is him and everything he does, and he will say auditor is knowing everything. So management responsibilities, list of scope in application, scope out application, key transaction, confirmation that audit trail has been enabled from April 23. This is another point. Lot of even automated systems, softwares has a ability to disable the audit trail after enabling. So they should not have disabled it any time in the year as well. All this is your responsibility to check. So better again usage of system auditor or some system expert mandatory. Because we will not be very real unless someone is CSR or who is DISA or as the case maybe who has a system knowledge, those people they can do. Whoever don't have that knowledge, please ask your friends or somebody who might be known to you and who might be willing to do it at a proper cost or whatever appropriately to help you in letting this validated. Because it is very important. Not a normal person can check whether it is disabled or enabled. It's not a tick exercise actually. It's not easy. Especially in ERPs, it could get complex. Well, I know a very big company which did not make it enable, and we gave them the right advice as I said at the right time last March itself that please check, and when we went and checked back prior, we found that for the cost reasons certain modules were disabled. So they enabled it from April 1. So it's under control now. The problem is if you would not have engaged before, you will not be able to qualify. If you qualify relationship foils, all problems will come. Better engage with them before. List of users, each application have been provided access to manage and maintain audit trail. This is another table level. The super user access and all will go for a toss now. If someone says someone has a super user access, which is again not known of what edit you would have done, very difficult to prove that audit trail is there. Because the super user can do top to bottom, right from starting initiating a transaction, deleting, still posting anything from trial balance, he can go to the accounting entry. That much access they will give him actually. So IT head and other people, they should try to avoid it and try to make a mechanism to prove that that guy has not done anything. They have to show you good logs to prove he has not done anything. Because everything is getting into a log. Anyway, so all that is very important. The list of management control to ensure that the access provided to the configuration is reviewed, no issues have been noted in the scenario. So indicative audit procedures, we have to check the controls, an automated control to check that audit trail is enabled, it is not disabled. Controls to ensure that the changes to the configurations are approved, whether they are changing anything, it's getting approved or not. At the back end, any approval is there, or manually at least they are maintaining an approval. If not in the system, there are a lot of companies where mail approval might be there. But again, that is a challenging part. They will say mail approval, they would have deleted that mail. All these practical headaches will come. Management say, hey, one mail only, what is there? All this we cannot accept. We will straight away tell them it is getting into a problem for us. Because tomorrow in our review, nobody will save us. Peer review, this will be the area of focus in the next cycle. Peer review as well as NAFRA review, I will tell you this will be the first area of focus in your audit report. They will not even go to going concern or something else. They will go to this one. Because they very well know we would have done some mischief here, especially in the first year. It's actually going to be very difficult. So control to ensure access is enabled, disabled, restricted. Control to ensure periodic backups are taken and saved. Involvement of specialists or experts in the field of information technology. This also they will check. If we don't have a DISA qualified person in our office, for example, We will check whether you are involved as system expert or not. Management side also, a system auditor should have checked this. Internal auditor alone cannot finish it actually. So the recommendations which we can go and give back is, please involve a system auditor when you are putting the scope. Management, when they get the report, please include audit trail, because a lot of people will do it in the last quarter only, 90% to my knowledge. Otherwise they won't do it in the first few quarters, including listed companies. Better go and tell them, include in the scope audit trail complaints. So let them include, let him say audit trail is also enabled. So I have one more comfort we will have. Because we do only sample, right? Even concurrent audit, where there are system audit scope is there, please tell them to include. So identification and completeness, access management, identification of records, evaluate the management approach, inquire on how they evaluated changes that are required for the maintenance of audit trail or upgrades of the, there will be a software change which could have happened, that is a challenge. From Tally someone would have gone to SAP during the year. Then how did they get all the records into it? How changes were not done? All these things will get additional significance. Previously they will only maintain a memo saying everything is transferred, all signed off. But how did you sign off without edit? Now I need to document that also. So all these documentations, if they are not done properly, had to get changed now. All that, it's better we go back before March and tell them to make all those changes properly. Software configuration, access, changes to the audit configuration, periodic review mechanism, completeness, accuracy of the audit trail or edit logs that made the change, date of change, fields change, and management testing. Same thing is covered, primary application level and transaction level. So even if some client says, we are saying these systems will not have audit trail like that, tell them to put a paper, like somebody said in Sundaram Finance example, other cases where a memo will be prepared for everything. Tell them to prepare a proper memo, place it before their board audit committee, or if there is no board audit committee approved by this MD or somebody, if it's a one-man company or that this is the software. This software, it is only for operational reason, not financial reason and things like that. These are the accounting software, audit trail is enabled, all that. Get that sign off, keep it. Otherwise, they will again say, we don't know anything about it. Finish. Straight.
Can this be included in the representation?
Representation, there is a specific section. In the implementation guide, there are specific representation paragraphs given, like you have to do it. Please copy paste that into your representation letter, please enable it. And also example management rep letter has come out from ICAI. That is before audit trail, use that template for your other representation also. I am giving you one more suggestion. Engagement letter, rep letter, firm normal templates, work paper templates, all have come from ICAI for all now. So there is nobody can go back and say institute didn't help me. This cannot happen. Because they start giving everything now after NAFRA and other things were saying that things were there. So it's better we use institute templates and then tell we have complied with ICAI's representation. So it can save you tomorrow. I can say I have taken ICAI's guidance, I have used, like what used to say I have followed guidance now. So start doing that. So regular monitoring of the logs needs to be established. Audit rule mandate organization to archive the backup, retain the log, enabling audit trail not be sufficient unless a control framework is built. The access to the configuration restricted being some. So all control environment, all that will again become important. What are the controls around this audit trail? Somebody has to support. So it's again recommended to tell internal audit and the other external auditor even doing internal audit other than your own colleague, if you are the stat auditor, to tell him that please take these controls as well in your list in the fourth quarter now for this year. Tell me if you have any exceptions. So better to get the comfort from him and then you do it on your own. Because for our time what we get with the client in the year end, it is very difficult for us to do 100% check. And if the transaction is very large. So what are the challenges? With the introduction of a new rule with the direct correlation to books of accounts, impacting and dynamics of the existing IT environment, identification of relevant application is a challenge. Management misses some application, we also miss that, we are into the problem. For example, there is a clarity which has not come on what to do with the key spreadsheets. Because you know in various cases, spreadsheets are used for recording entry as well as a supporting document for some big calculation. You have an impairment working on big spreadsheet will come running into 50 pages. and that spreadsheet will be the document. 10 lakh amount alone will come from there. Or value of the company 15 lakh or 20 lakh will come. How it come? Go to the spreadsheet. So where that spreadsheet is saved, who has access to the spreadsheet, it's a password protector or not. See, these are some best controls which could get implemented. Saving that spreadsheet in a secure drive or saving it in a secure place where only maybe the CFO or maybe only the finance department or 2-3 people will have access, and even not an edit access, only view access. These things, at least if it is enabled, we can prove even the spreadsheet as audit trail. Spreadsheet, still no guidance has come even from institute. So spreadsheets, it is going to be an area of challenge in this year, but we'll expect some guidance before some time. We have also represented, and it is, but then these good practices, please ensure. Keep the spreadsheet password protected, like financial statements will be password protected in some of cases. Keep the spreadsheet again like non-editable. You can do it without edit, only read only. If you keep it that way itself, more or less it is kept with trial. When it's edited, we'll know who is editing it. So inadequate IT infrastructure, voluminous data will require additional storage space, additional cost. Liaising with technical support team, getting their buy-in and getting them understand. In one of the case where it's going on still, the global IT team is not understanding the problem of this particular daily backup. They keep saying they have multiple problems, they have multiple things. Indian management continuously saying them, it will be a non-compliance in my audit report, it will be main audit report. They are not again trying to understand. Enough calls are happening as well, but they are not understanding the rigor or the seriousness. Very big group, private company, problem happens because globally they are different. Unfortunately, this guidance, when we saw risk-based internal audit, that is already globally there. We saw even BRSR and your climate accounting, COSO framework on what is that, sustainability. All that has come global. India has taken upper hand here. This is applicable only in India, not abroad. And the other problem is you have subsidiaries outside India where you are doing consultation. You are supposed to make them also comply with this audit trail because you are giving opinion on their numbers also. Think about managing our own person sitting here before you. You have to manage the subsidiary auditors, subsidiary people also. It's not going to be easy actually. But then the first year, administration, ensuring a robust control from framework pertaining to administration, monitoring of heavy logs, frequent monitoring of heavy logs need to be aligned with existing internal control framework. So changing how you have to do it, then enabling the appropriate retention of the periodic backups and other things, archiving backups. All this is a cost and time for people. They will say, why should I invest in it? Global people will say this is Indian problem. But then they will get into a problem one main report is qualified. Then everyone will come back. Because once you give a qualified report, bank will not give them anything or investors will have a problem. Straight away then they will come. So it's better even if you have a global company, IT, private company where it is there, start engaging with them, telling about these things. Some of the companies can at least implement it during the year so that we can say after a point in time this has got implemented. So it will bring down your rigor of what you are drafting. So unmodified reporting based on an examination, which included the company has used an accounting software for maintenance. This is a normal report. Did not come across. Unmodified consolidated, see as I said, the subsidiaries associate JV software maintenance which has the feature of, this is a very, very challenging scenario. But how do you know with a company with 100, there are companies with 100, 200 subsidiaries, 50 JVs and things like that. Think about their situation of going back to each of them to make sure this has happened. It is not actually easy. But one thing is it is giving better governance in that orientation also. It is making them also better governance. So scenario 1, management may maintain adequate audit trail. Management may not have identified all records. Accounting software does not have the feature. This is dangerous. Now this third one I am not expecting unless you disable it because even Tally has this. So I think the third option is not come. This is there when the guidance came. Tally then brought the revised version. Zoho and all I hear has audit trail to my knowledge. But please subscribe to a version which has this. Tell your clients to do that. So modified reporting based on the examination, we say the audit trail has not been preserved by the company as per statutory requirement. The company has migrated to so-and-so system in the process of consequently unable to come on to audit trail. If we give this sort of wording, then it has its own consequence. Because it will have a direct impact on income tax. If you see income tax, your thing like undisclosed income or something like that, straight away they will come to a company where this sort of reporting is given, though it is on the very, very practical problem. But then once you give a report like this, the companies are going to face their time. And they will not allow us to give a report like this also. So it is going to be a challenge. This year is going to be a challenge, but at least we have to go and tell them that we can't, because if you are not going to qualify or give a report, tomorrow from peer review, nobody will save us actually. We will get into a problem. And it is also going to increase cost of audit and audit fees, definitely. That is another area which we have to align with client from now on. Because once we go, at least now we have to expect the fees for March, we have to argue with them. Otherwise it is very difficult to go with clients because it is already a cost to them, then we say our cost also is going to increase, they may not agree for it, but we have to go back. So special consideration fraud scenarios, in evaluating the severity, fraud and error could not have established lack of maintenance, availability of relevant trial, likelihood deficiency will result, magnitude, performing assumption. So this could have fraud scenarios. I rightly said in the beginning itself, frauds can be intentional misstatement of the number, which is quite happening for tax evidence or for reporting more profits because of pressure. I would not have dispatched the good, I'll say revenue is recorded. So all that will become a problem. So it's better to go and check when your revenue entry or purchase entry is passed. If some entry is passed after 31st or after the last date, even not last date, there is a problem of cut-off. If it is definitely after last date, we have a problem on this. Yeah. So this I want to cover before going to the questions. We saw two things, right? Software as a service. Also we saw something like third-party service providers, where someone asked in the morning whether internal audit is outsourced. Similarly, if this software is we are using an outsourced software. It is not our software or standard software. We are using the software given by somebody else for your payroll processing, or somebody else is processing the payroll for you. ECL tool as well, for example, that tool is defined or designed by somebody else. The edit and log, because SAP or other Oracle license is your own license. So the edit will be known to you, whatever you do. Whereas in these cases, you are using it only as a software as a service, third party, where the edits done in that software is not captured on your own. It has to will get captured somewhere else. So you have to get a certificate from them. An independent auditor should give them a certificate saying their systems or their software are audit trail compliance, and they have to give that certificate to you before this year. This is again a challenge because it will involve additional cost for them. Even if they are getting their SAS 70 report, SOX report for their payroll processing, people are bound to get SOX reports for their international compliance. We have to tell those people to get audit trail also as one of the scope area to be included in their audit report. That audit trail is also enabled in the system. So that has to get checked. So the institute says you can get it in that report itself, not a separate report, but ensure that in the SOX SAS 70 report, audit trail is also in a scope and given saying that it is compliant. Then we are okay, or you have to get a separate certificate. This has to be from all the third party providers and all people, especially involving payroll, as I said, ECL, or some even revenue accounting software, or some software like this marketing software. Suppose if the agreement rates or amounts are entered in the software, automatically it flows into SAP. That particular amount, then it is again accounting software only. Because when amount is picked up not from SAP directly, it's from some other source. So you have to take from that software vendor also. So this is another thing which we have to go back to client. This list of software, what they have to do, audit trail compliance involving system audit and IT application guy expert. In creation of user account or adding new journal entry, changing an existing journal entry considered as change. Yes, if you even change an existing journal entry and try to change the amount also, that is also edit only. Not deleting alone or creating new or whatever. Editing database, editing accounting, everything, any edit you make to any amount, it is a change in accounting system or change in accounting software. Sales are recorded in a standalone software. This I told you. Your banking software in NBFC, all your loan records, everything's interest, everything will be in that. One entry, loan debit to say customer control account or something. Only one entry will go into Oracle or SAP. all that loan records will be in banking system. If the banking system does not have audit trail, then also gone. Because that only has everything. It is only one liner entry which goes. All sales 2 lakh items is one. Only debit status to sales, one entry goes in Oracle or Tally. I can't say that one entry it is audit trail. This system should have audit trail. There are a lot of people who says only the amount goes here. My accounting software, people will try and tell you, my accounting software is Tally or SAP. This is only sales software. No, from there only your amount comes. See, indirectly, if that is wrong, this is also wrong. But there are arguments which have come to us so far saying all this. And we are still fighting against certain things. Then it's going to be a fun this year in the reporting anyway, fine. Auditors will need to evaluate whether management has also considered software compliance account rules. Any software maintains records that fall under definition of books of accounts. I said again, is the reporting applicable to all class of companies? Yes, it is. For this is all come from FAQ of Institute. With all class of companies, or in foreign company, Indian company, one person company, one man company, every company, even Section 8 company, everything is covered. Whether partnership firms or LLPs are covered, they are out of the scope as of now. Again, we are not sure whether a guidance will come next year that this is going to get into them also. Any questions?
This payroll and all, they have to do certificate or it can be registered through management?
It can be.
If it is given as a service of third party software, whether they have to give the certificate or it should be routed through management?
See, it depends. In one of a big company, what I heard from one of the audit committee chairman person is, I don't want a certificate from some A, B and C, normal guy. Try to get from a reputed person. See, in that sort of scenario, we also sort of tried advising client is, fortunately in that case, that third party service provider is a SOX control guy. That is, they are handling say 15,000 employees in that company only. They are also handling various employees of other big companies. So we told them, Institute gives a suggestion that in SAS 70 report, where they are getting from some reputed Big Four or some big auditor, please include audit trail. So they will cover audit trail as additional scope and they will give the certificate to us. So then it is fine. As you rightly said, it depends. Actually, Institute says get it from any third party consultant. They didn't define who is it. But in a normal parlance, it should be someone who is capable of doing that work. I can't have some company which even does not have a CISA or a DISA somebody sitting in giving a certificate to a big company with 50,000 employees processing software. That's not going to help.
After audit finalization, you find more entries to be passed for rectification.
That is fine, but as long as your rectification entries are backed up by approval, it is done with a legitimate purpose. So that 13th period, 14th period entries even in SAP, it is okay, provided there is approval. This is more to capture things which I told you first. Like you are now putting some revenue for MIS purpose just to help investors who never sees the final accounts. You delete those entries for financial accounts and it goes to next year. So why you are deleting, you should give the answer. Once you start giving the answer, investors will be after you. And again, entries to reduce tax. All these entries are coming. Entries to control tax or entries to reduce profit. All those things will get captured. Any entry passed after the normal hours, all that you have to see properly. All that will, and direct edit to databases, that is also happening. That this is actually a very game changer. That's why I wanted to cover that first rather than CSR. CSR I'll just take it through after our tea break. That everybody knows. In CSR, according to me, unless somebody has some practical questions, there's nothing really great interesting unless a normal provision which I'm going to take you through. That's why I covered this first.
So other than the management representation,
Yeah.
how do we develop the working papers for it?
Working papers, the first year you have to start developing saying, see, you have to actually have a working paper to say every software which is affecting books of accounts, the testing of audit trail, I have a significant, that's why I said involving experts is important. As a normal guy, if I am not a CISA, DISA guy, I will also not know, other than audit trail, I will not even know a system control to test. So I am using some of the experts, even in what our firm, some complicated system audit, we are not doing on our own. Though we have a DISA, CISA person, we are taking his help as well as the external guy help for the complicated work. This is one of the area where we have to take their help. As I said, some people who are at least having that knowledge will have a knowledge of testing this. Where the controls and the log testing, all the edits are there in that.
preparation of books of accounts includes minutes books also. I remember to see.
Includes?
Minutes.
Yes, it says it includes minutes in the normal course. Only point to prove is, suppose in very rare scenario, your minutes, unless minutes is there, that amount itself will not get incurred or something. With indirect correlation. For example, you are going to borrow something. To my knowledge, see again, minutes, one thing is it is though there, obviously minutes gets approved. So to that extent, unless somebody keeps the minutes only in a draft stage without anybody approving it, this challenge will not come, because whatever is recorded.
Question is whether minutes books, if it is maintained on system, whether that also requires.
Yes, if it has a financial statement impact item and not a normal ones. Wherever it has the books of account affected item getting there, like your loan taking or approval for any provision. See, generally in a big company and in some good governance company, whatever critical financial statement item has to get recorded or something, board or audit committee approves. So obviously in that case it's there, but as I said, if it's in a draft stage, better to tell people to finalize it soon, not to keep it months together, to keep it in draft stage, considering this gets into this definition. Not everything in minutes will be audit trail. There are a lot of operational things which goes into it. Again, caveat, what RBI said differently from April 24 is different. I am not going to that now because we are only having MCA's audit trail as today's session. Because after that we'll deal it separately, but then please go through that circular also, whoever is in NBFC. This service organization support is one area. List of software to be, what is the list which comes in, goes out. Some feel payroll, still payroll processing is not an audit trail actually. There are companies which argue, though we have a different view because specifically, unfortunately or fortunately, Institute in its implementation guide has given payroll service provider as a main example. So my problem is tomorrow if I go against it and the LAFRA or somebody comes for a review peer, they will say in Institute guide payroll is there. Why did you not take from payroll guide? ECL still I can say, but ECL also, the point is all the assumptions in the ECL tool gets changed. The credit rating of the customer is changed, all your other data of the customer is changed, the location is changed, his own other scores are changed, certain things of say the RBI index or something what you put in to calculate the provision change. If something is changes, your ultimate ECL provision number will change. Again only one liner goes into your accounts. Expected credit loss is credited or debited as the case may be. Provision is debited or credited as increase. Where it comes from the tool. So again the tool has indirect significance on your financial statement. I can't negate it. So ECL, payroll and some of these investment valuation and maybe derivatives, certain tools which have these calculations which are affecting financial statements, you should have audit trail complaints.
Cloud computing.
Yes sir?
Cloud computing.
Yeah, cloud also they said, software as a service, if it is on the cloud it's again, if the edit capture whatever is there is only accessible to you, then you can prove that and take the audit trail feature. But in some cases that feature will not be accessible to you. If you use it as a service or you use it only like a payment to use only the software, the edits you cannot get captured. If you are not having the access to the edit, you have to go back to the person to get that certificate as noted. He will be able to give the certificate with the third party help. Any other questions? Anything else? Yeah, sir.
What about some companies install audit trail middle of the year?
Yeah, middle of the year you have to say that that is not functionable or the compliance is done from the middle of the year only. And from this date to this date, audit trail was not enabled or not compliant. We have to give that statement. You have to give that and say subsequently compliant by so and so date to so and so date or whatever. So at least the rigor will come down. Not as I said, non-maintaining audit trail, the problem is other problems. They will get into a lot of regulatory reviews. Obviously, especially even a very small company will get a problem of income tax. Where income tax will definitely go into a scrutiny. And go into all of, you know what happens when scrutiny comes. I did not tell that earlier. They will go into it. Because they are waiting for chances of linking things now. And this has purely come to my knowledge is one main reason is tax avoidance actually. of booking those bogus entries and other entries is why this came. It's not for people who are compliant and good. Primarily for that.
Once they come for right investigation, they will take SAP, only the changes.
Correct. They will only ask you for the audit trail logs.
Yes.
They will take that and finish it off.
What is the reason for the comment?
Finish. Easily they will capture. And they will also bring experts in doing things. See, don't think that government or government organizations or anything like before, they are having old people sitting or someone who is not there. I know because recent RBI reviews or RBI meetings which I have encountered as a partner with a lot of NBFC audits there and IRDA, especially RBI, the questions are actually extremely smart. And the people are all young and energetic and other people with a combination of an older boss sitting there as well.
Bring the consultant also.
Yeah, yes.
They'll take the hardest.
And the questions they are asking are not easy to answer. They know everything. And NAFRA still it is a problem because all ex Big Four, all ex other people are sitting inside. That to abroad people, not even India. So they are having enough knowledge and enough things of everything of our laws. And some of the NAFRA reviews which have come up, one example, just going away from this, I want to tell you, a very big corporate, Mahindra Group only is out in public, I can name it. Mahindra Holidays which has come in, where segment reporting disclosure was questioned. Big Four was the auditor. The company had disclosed only one segment. They went back to their XBRL Companies Act declaration, where more than 3-4 segments were got disclosed as the nature of product service, and each was more than 10% of revenue, more than 10% of your reporting deadline, reporting portfolio, and they linked it. They are even checking XBRL records. And they linked both, and they said you are non-compliant, and from this June they changed the segment reporting. KPMG also was sent notice for this, that they are not compliant properly. So it's not like they are just going to come and do some review and go. It's not going to be easy. We have to be active. This one has to get properly compliant because this has a particular reason in why it came also. And they have given 2 years enough time for people to defer it. Yeah. Caro, a lot of comments are coming from NAFRA that the investment reports are not right, loans and advances thing is not right. The recent findings are also like that it is not right. Fine. Otherwise, thanks for the opportunity for this session as well. Probably CSR I'll cover after tea break in half an hour. I can close it. Any questions? Otherwise, fine. Thank you. A company or otherwise, dividend received from other companies in India which are covered under and complying with the provision. So already you got a share of profit from some other company who are complying with CSR, that profit again will not get covered. Net profit in respect of financial year for which the relevant FS are prepared, not companies at 1950s. This I think is not relevant now. In case of foreign company, net profit means net profit of such company as per P&L account in terms of 38(1) of 198. It excludes capital payment, capital loss, capital expenditure or any loss on capital nature. Thereof not including any excess of written down value of asset which is discarded, sold, destroyed, and any change in the carry amount of asset of a liability recognized in equity reserves. So these things are specifically excluded. Profit before tax is what you have to take, not profit after tax. If you are taking profit after tax, add back tax. So these are some of the spendings. Probably I'll read out. Small. The spendings not qualified as CSR in project not relating to Schedule 7, spending in the ordinary course of your business outside the local area of the company, operations where it is there, spending outside India by a foreign company, spending that benefits employees and families that are not to be covered, contribution given to political party is not covered, that is not allowed as CSR. Any spending which a company is statutorily required is not CSR. Spending in violation of anything is not CSR. Beyond the limit in policy is not in CSR policy. One-off events or on projects not in the policy is not CSR. Ongoing project in the 5th year. So these are all specifically not qualified as CSR expenditure. And board responsibility is to compose a committee, disclose composition of CSR, spending up to 2% of profits required, report the reason for why it is not spent, monitor the implementation of the project, utilization certificate, unspent amount to be taken up, administrative overhead is not exceeding 5%, that is also board responsibility. So here as well, board is given a lot of onerous and responsibility. So CSR committee, board is to constitute a committee consist of 3 directors. Company is not required mandatorily to appoint independent directors, or that do not require 3 directors, but qualify for CSR. The following private company having only 2 directors, they can have only 2 in the committee. Not required to have independent director, may have CSR without even an independent director. Foreign company authorized representative, person nominated in this regard. CSR budget is less than 50 lakhs, CSR committee is not required. Both can be the committee itself. So salary to employees of CSR department may be paid out of the CSR fund, but the fund cannot be utilized for the objectives of the activity beneficial only to employees. So you can't have a fund which is only benefiting your employees. That can't be called as CSR fund. Schedule 7 specific activities. CSR activities and Companies Act have to be undertaken only in the areas under Schedule 7. But traditional CSR includes activities towards social and environmental uplift and upgradation. It also basically includes directed national development. That is in the right spirit for a country like India. So implementation, the board shall ensure CSR activities are undertaken through a company or a registered trust or a company under 12A or 80G, either singly or along with another company. There can be a group CSR activity company which does it for the group as well. A company under Section 8 or registered trust, and any under an act of parliament. A company may also collaborate with other companies for undertaking projects or in such a manner that CSR committees are in position to report separately. So it can do it along with other group companies as well. The board shall ensure administrative expenditure shall not exceed 5%. We saw this. Any surplus shall not form part of business profit. It shall be plowed back in the same project or transferred to unspent account, and pursuant of policy, an annual action plan should be there if you have unspent amount. And when a company spends excess amount, I can carry forward it for 3 years and utilize that actually against my earlier the next year's spending. And until a fund is specified is in Schedule 7 purpose of this, the unspent amount shall be transferred to any fund included in Schedule 7. So disclosures, the board of directors shall mandatorily disclose the composition of committee, policy, projects approved all in the website. Every company shall furnish a report on activities in Form CSR to register, and on an addendum, so AOC, in your AOC XBRL filing also this should come. The disclosure of contents of policy in the board report of website shall be an annexure to the company's report. So CSR and sustainability, business cannot be successful when society fails. Commission of the European Committee Union says CSR is a concept that the enterprise is accountable for impact on relevant stakeholders. Continuing commitment by business to behave fairly and responsibly, contribute to economic development while improving quality of life is important. Business as integral part of society, critical role in substance and improvement of healthy ecosystems. The UN Brundtland Commission defines sustainability as development meets the need of present without compromising the ability of the future direction we don't need. So sustainable, for a company to be sustainable, it has to do good things to society as well, and hence this concept has come. And in the new BRSR and sustainability reporting, a score is given to the company only based on the CSR activities as one of the key aspects. So in the recent findings on your sustainability reporting guidelines and disclosures, CSR will be one key disclosure which is coming. So this is in BRSR, again it is applicable for all mandatory listed companies and other companies in India also. The utilization certificate, a board shall satisfy itself that funds have been utilized for the purpose, manner approved by and Chief Financial Officer. A company may undertake CSR activity by itself or through third party trust. When the company undertakes through a third party, then it has to obtain independent practitioner or utilization of the funds from the auditor in practice of the third party GO. So if you are involving an agency, I should get an implementation utilization certificate from the agency whether their routing is properly. And the duty of the auditor or CA to submit the report after verifying third party has spent the report. So this is also common. A utilization certificate is asked by companies to give the CSR compliance. Similarly, impact assessment as per amendment brought by Company Rule 21. Impact assessment is required in case where the average spend obligation is 10 crore or more in immediately preceding years. They are required to mandatorily undertake through an independent agency on the impact of this, and every project outlay more than 1 crore completed 1 year. The internal audit year report has to be placed before the board. Impact assessment report, companies can claim up to 5% of total expenditure, 50 lakh. So this can be claimed for impact assessment expenditure. This is assuming significance. In one recent case, some company had approached us also to do this impact assessment actually, where some big private companies, if they want to test whether their funds are used properly or whether the agencies have done correctly, they want to get this done. So they can voluntarily even get it done despite this 10 crores as well, possible. So social audit versus CSR audit, the SEBI has moved one step further and defined clearly social impact assessment audit. Social auditor clearly defined the norms for the social auditor. This I want to cover sometime, is very important. Where the new impact of social audit report of SEBI listed companies will have a penalty if you are not giving a social impact assessment report as per SEBI. This is becoming mandatory for listed companies now. So you have 1 crore maximum, 1 lakh, 1 crore fine of this. And ICAI has also published 16 social audit standards that correspond to the subject areas given by SEBI. And this is one important thing for us to go through after going, like the audit trail guidance, go through the social audit standards given by ICAI. It's come very recently and will become mandatory for listed companies. This point is very important because of globally again sustainability, social audit, other things. ICAI, SEBI has also brought in, and this is important for us. Any questions? Otherwise, fine. CSR is also done.
Sir, the lot of companies are giving donations to the state government, flood relief. Are they eligible for CSR?
That will not eligible for CSR. Some projects are eligible, but mostly since CSR is disallowed there, they will claim ATG. ATG expenditure is allowed, right? CSR is not allowed expenditure for income tax. So if companies are contributing.
I'm not asking for income tax. The donation to the state government is eligible to be claimed under CSR.
See, during the COVID time, some schemes are allowed. Actually, it got allowed. But generally, political party related,
Government of Tamil Nadu.
Government of Tamil Nadu will get allowed, but to my knowledge, I think you can't claim both. Now, if you are claiming it as donation for income tax sake, I'm saying, I can't claim it as CSR. Either only one is possible. And generally, companies might go because there is a redundancy on part of department to disallow CSR expenditure, whatever you claim. So better companies are disallowing it and claiming it in ATG by getting that certificate. Because obviously, central government scheme or state government scheme, you will get ATG certificate and you will claim income tax deduction based on that. But a lot of controversies came when that COVID expenditure was done for employee welfare. So a lot of employees related expenditure was incurred. So since it actually clearly said any employee welfare is not covered, there were some interpretations going on whether COVID is a treatment related, if they are doing for employees, whether it is CSR allowed or not allowed. A lot of controversies started coming. But just to take away, good thing is like that social audit and that social guideline of this, people have to start going through what in ICAI has given because that is mandatory for all listed companies now. And that is a new opportunity for CAs as well, doing that social impact audit. And BRSR certification and other things will soon come in after 1 year. Sustainability reporting is become mandatory in India in another 1 year. For all companies with above 250 crores, top 250 listed companies it is applicable in 1 year. And I think top 500 is in 2 years now. So soon it will get applicable in over a period to everybody. But these two companies who are into some big clients, who have some big clients in this place and some even medium clients, they will start asking you to get that activated. If you are not the stat auditor, you are doing tax service and other things, they can come back to you saying, are you aware about social audit, are you going to do it? So these are areas which people can think about. Any other questions? So it's fine. I just rushed to this little because this topic is known and I wanted to stop where it is relevant. My normal 2% people are aware.
Donation to your trust is enough.
Yeah.
Donation to your trust. Trust must be registered with the list of companies.
Trust pannalam, but only thing object of the trust and the CSR that has to be within that schedule 7 objects. Then it is covered. As an employee oriented trust, they will not allow.
So it is mandatory that they do it through a trust, well registered trust. Is it mandatory?
Utilization certificate is mandatory actually.
Is this CSR registration mandatory for the trust to be trust which can take CSR?
Yeah, there will be permission required for that one to function as a CSR. Now objects of the trust and pananam eppadi. Even when you are registering it as 12AA, whatever it is, you have to know the object of that particular trust. So either CSR will be one of the object, whether that thing mentioned in Schedule 7 is covering there or not, you have to check.
Banking companies are
NBFCs are also covered for CSR. NBFCs have to contribute. Only one catch in NBFC, since you asked that question, is that bad debts written off normally gets added back. Provision for bad debts or ECL in a normal company, it gets added back when you compute CSR. But in NBFC, generally they don't add it back. For an NBFC, it's an operational expenditure. So for an NBFC, my ECL is a routine thing, right? Like what expenditure I have, non-loss or what I expect. So in the case of NBFCs, they don't add back. But in a normal company, I have to add back all those provisions. So that is one practical scenario also which happens.
company அதே அவங்களுடைய லைன் ஆஃப் பிஸ்னஸ்ல இருக்கிறது சிஎஸ்ஆர் கொடுக்க முடிய மாட்டேது. இப்போ ஹாஸ்பிட்டல் இருக்கு, வேற ஒரு ஹாஸ்பிட்டலுக்கு சிஎஸ்ஆர் அவங்க வச்சிருந்தாங்கன்னா கொடுக்க முடியும். கொடுக்கக்கூடாதுங்கிற மாதிரி எங்கேயோ பண்ணுறாங்க.
எங்கேயும் இல்லை, பட் இட் அகைன் அவங்க இருக்கும்போது ஏன் தேர்ட் பார்ட்டிக்கு கொடுக்குறாங்கன்ற ஒரு ரீசன் பார்க்கணும். ஏன்னா அது ஏதாவது டைவர்ஷன் ஆஃப் ஃபண்ட்ஸ் மாதிரி வருமா? நாட் ஆன் திஸ் ஆஸ்பெக்ட், பட் ஏன்னா ஜென்ரலி அவங்க ஓன் ஆப்ஜெக்டிவ் இருக்கும்போது 9 out of 10 cases they won't go outside to contribute that if they have the option of contributing to the own group. Now for example, previous life I have seen lot of Sundaram Medical Foundation or a contribution is coming, where that will be one of the key. So I am just giving an example. So not on, they also do to your Prime Minister Fund and other things generally. And outside trust panna maatanga generally, they have their own.
They have to spend. Suppose they can they give it to Sundaram Foundation, get clean.
I think it's allowed. If they are giving it in a normal course, then that's allowed. That is
exclusion, the same line of business.
I'll come back, sir. Let me come back there.
Kindly give us your email ID.
Yeah. Email ID is there in the last.
We could see.
This slide maybe I didn't show. This will come to you anyway, including this.
No, it is going to be hosted only in website. It's not.
Okay. Yeah, sir. Thanks everyone. Thanks for the patient listening. Own employees they put that.
Thank you, sir. Thank you. Very nice. Thank you.
Oh.